Hey, it's Michael Tiny Soul with the Market Autopsy video for the week ending Friday, October 19th, 2012. Let's take a look at the upcoming economic reports for the week ahead. On Monday, FOMC member, I'm not going to even try to pronounce his name because I'll butcher it. I can butcher the name Smith or Jones. See, I already tried to butcher them. Anyway, he speaks at 1:30. Tuesday, it's the start of a two-day FOMC meeting. Not really anything that's shaded really dark, so no real numbers expected that can have influence. On Wednesday, we have some early numbers before I'll be rolling over for the 10th time at that time. Then 7:45, Draghi speaks. 10 o'clock, Draghi speaks again. Okay. 10 o'clock, we have new home sales. And then at 2:15, we have the FOMC statement. So this is the announcement, okay? And then the Fed funds rate also at 2:15. On Thursday, core durable goods, the weekly unemployment claims and pending home sales. And on Friday, advanced GDP and revised University of Michigan consumer sentiment at 9:55. It's rated orange, but I've seen it move us. So that's the economic reports coming up for this week. Now, if we look at the chart of the S&P, and usually I'll say that the S&P cash, it doesn't really take into account gaps, but this is basically what the day looked like on Friday. If you change it to the SPY, you can see there's a little bit of a gap, but for the most part, it looks like the actual S&P cash chart, as long as you type the correct symbol in. Anyway, so we had a pretty ugly expiration day. It was a nasty move to the downside. We're back at the 50-day moving average, and as you can see here, I've drawn in some channel lines. Now, are these the greatest channel lines of all time? I don't know if they're perfect or not, but they sure look good to me. I mean, it looks like I'm doing my best here to connect these levels here, and that would project that support down here into the 1420 area. Of course, if it doesn't get there on Monday, it could be a little bit lower as the channel will continue to go out into infinity or whatever. But so it could be around that level. And it's a sharp move down, but overall, again, the bears are coming out. That's it. The top's in. It's over. Ending diagonal, blah, blah, blah. Okay, whatever. Okay, but right now, we are still in an uptrend here. All right, the FOMC has a bullish tendency. We usually rally into the FOMC. So weakness on Monday or weakness on early Tuesday, I'm going to be watching that for a buying opportunity if we, go down because of the big range. And I go over this in the morning email, but because of the large range, I'm looking for more of a digestion day on Monday than actual follow through. But we could see some follow through early, clean this up, and then we could chop into the FOMC meeting or get a little bit of a lift. I think it's too early to put a fork in the market. I think it's way too early to put a fork in the market, and when we go over the sectors, we'll see why. Now, one index that is nasty looking is the NASDAQ 100. Okay, tech is getting killed here, and a lot of the big popular names, they're getting beaten down. So the broad market may look like it wants to hold support here, but it looks like the NASDAQ is holding, is going to hold or going to test. Sorry, I don't know if it's going to hold them. Apologies for that. It is going to test a much bigger number, and that's the 200-day moving average. I mean, the 50-day is important, okay? It's a very popular moving average, but the 200 is the grand poobah of moving averages, as they say, okay? And this is how we came out of it. We broke this gorgeous triangle here. We were right on top of the 200-day. We airlifted. We went to a new high, but now, we are lagging here on the NASDAQ, and that is not good for the overall health. So I am expecting a bounce into the FOMC meeting, but if that bounce is lame, then I think it's time to really start favoring the short side, at least for trades. Okay, the NASDAQ coming up on its 200-day moving average. This must hold. If this closes below the 200-day moving average, I switch to market neutral. On the NASDAQ, I would switch to bearish. But because the NASDAQ 100 would be under the 200-day, the S&P would still be above the 200-day, I couldn't go all-out market bearish. But if the S&P lost its 200 also, then yeah. I mean, this is my bull-bear barometer. And despite what some of the super gurus or their henchmen are stealing from me, I mean, they're stealing my Sunday night strategy sessions, which will be starting up again soon. And they'll be for free, by the way. They're not going to be a charged service where you're going to just get a bunch of hubbub. The guy can't pick a winner in a one-horse race. He's not going to be able to do Sunday night strategy sessions or whatever they're calling them. They'll probably rob the name also. But this is a key level for me here, and I call it my bull bear barometer, because there have been studies done where it is absolutely there is an absolute edge. And I didn't do the studies, but I've read them. So, and believe me, I take the word of those who did them. They have a lot of experience with doing this stuff. And I don't take it, oh my goodness, that's it. It's not red light, green light, okay? That's nonsense. And the people that are trying to tell you that trading is that easy, it's just whatever. But the above the 200-day has a statistical edge to be long, and below the 200-day has a statistical edge to be short. So for me, that's important, okay? And I watch it. And when the markets are mixed and one is above it and one is below it, I just go neutral, okay? But right now, NASDAQ, giving it the benefit of the doubt that it's going to hold the 200-day. Let's see if it does just that. Now, the Russell, okay, also showing better relative strength here, because it's just below its 50, but still above its 200. You could see the Russell, which usually trades a little bit more volatile, dips below and comes back above, and dips below and comes back above. Okay, so the 200-day can be watched also for potential support there if it continues on the downside. But the NASDAQ 100 holding that 50-day, the 200-day, and the S&P holding that channel line, those are the levels that I will be focusing on this week. Here's the semiconductors. Okay, the semiconductors below all the moving averages. Got to grab a Fibonacci grid. Do this. And you see 359.63. That's probably not the exact number. I don't care if it is. I use these levels as reference, not as exacts. But around this level, you can watch for potential support. Look at some stocks. Here's Klatenker. Yeah, just not looking so sharp here. NVIDIA. Wow. Right, we highlighted this triangle. It broke down. Looks like it wants to test these lows at a minimum. Broadcom, below all the moving averages. Just can't get going. Intel, I talked about Intel being, I believe I talked about it here. I might not have, but it's oversold and unloved here. All right, this is, in my opinion, a nice stock to watch for a potential bounce if the market gets going. But right now, it's pretty stretched here to the downside. You got the 78.6% retracement. You can either do it there, or you could do it there. If you do it there, it's down to 20, hole number 20. Then, of course, if you want to go back here, this is a weekly chart, back here to 09. Okay, you got a little bit more on the downside here, so let's run this right up here. All right, so you have some zones at 20. Okay, and if it loses that, you got in the mid-18s and then the high 15s to watch. But I would watch this one, because if the market does decide to get a bounce, this could be one to pay attention to. I'm not saying the market is going to bounce. I'm saying if it does, it's one to watch. Like I said earlier, we want to see how the NASDAQ reacts at that 200-day, and we want to see, of course, how the S&P reacts at that channel line. So here's the banking index, and the banking index is showing very good relative strength here. Okay, we had a bull flag here, come up, we test the highs, and now we're in a coil. So this is one of the reasons, in my opinion, that the market didn't just get completely, totally annihilated on Friday. And that's saying a lot, considering the NASDAQ was down, whatever it was, 2.4%, S&P was down 1.7%. Yeah, it could have been worse. The S&P could have been down better than 2%, but the banks that held up. Look at Bank of America, for example. I mean, this is it wasn't down on the day. It wasn't up on the day, but it was barely down. All right, and don't think like, oh, Bank of America, that doesn't count. No, it's a pretty influential stock. I mean, it only trades 170 million shares a day. Okay, well, actually, I'm sorry, the average is 140 million. It only traded 170 on Friday. All right, but you can see up here, $10 is going to be the line in the sand, and definitely something to watch. Here's J.P. Morgan. All right, J.P. Morgan showing a little bit more weakness, right, down 81 cents, but still not getting crushed here. Citigroup may have double topped up here. Okay, we have to watch that. Northern Trust. Yeah, just more consolidating than anything. Okay. How about Bank of New York? Yeah, I mean, it had a nice pop until Friday. Came up into resistance here. So definitely the financials are a key group to watch. Here's a broker-dealer. You know, the 200-day stuff that we identified this, and since then it's just been chopping around. There's the 50-day moving average, holding for now. Morgan Stanley, again, not getting killed. Legg Mason, all right, into the 200-day, pulling back. But again, not a huge rejection here. See if it can get above that. And, of course, Papa Broker, Goldman, right, the big boy, Goldman Sachs, didn't quite make it up to this high yet, up at 128.72. But a pretty nice push off of the pullback, and earnings have been released. In the live chat room, I said, when are Goldman earnings? Somebody says they already report. I said, oh, yeah, that's right. I was there that day. Yeah, amazing, right? But anyway, you can see it's couldn't hold 125 into the option expiration. So let's see if it can get above it this week if the market decides to get a bounce. But the financials are key, because if they give way, okay, then and tech stays weak, right? There's not another rotation back into tech. Then this could be could really result in an ugly move here for the market. Right now, tech is wrecked fine. Financials are holding up better than the broad market, better than technology. But if that gives way, yeah, it's going to be it could get real ugly real quick. But can't assume that, okay, the financials are just going to catch up. They could hold in strong. We have the election coming up now in just a couple of weeks here. So the market could hold up into them. And I know a lot of the slimy super gurus are predicting what will happen if one wins over the other, and how they say, I love the line where, I don't like them both. That's really making a stand. And if you ever follow any of these people for more than 15 minutes, you know that they do have a favorite, and they're not going to just change their mind. They just don't want to say it because how they used to be rebels and used to say what's on their mind. Now they have to be careful because their sushi money is going to dry up if they insult the wrong people. So anyway, here's Goldman. Here's a wedge I saw as I was drawing this out. So this is a volatility contraction here. Now, a lot of people think a rising wedge automatically means to a drop, but no, it could squirt out to the upside as well. It's more of it's definitely a volatility contraction pattern more than a directional pattern. So Goldman's ready to move this week too. Let's see what happens coming up. Now the cyclicals, okay, again holding up okay. Down 1.6%. Wow, that doesn't look like it's holding up okay. Look at the chart. It's still above all the moving averages. Yeah, it's a lower high, okay, but it's not crushed. It's not down below the moving averages. It's not moving, in a real expedient manner to the downside. So it's holding up okay here. All right, let's look at gold. Down to the 50-day. Getting a roll over here at resistance. Let's see if this holds as potential support. Silver, below its 50-day. All right. Now, silver tends to have a little bit more volatility than gold, to put it mildly. If you ever trade the futures contracts, it's a lot more. But watch the 89 EMA and then the 200-day. Oil. Some people saying gas prices are being manipulated ahead of the election. I don't care, as long as it costs less to fill up the tank. It could be for any reason that it wants to, that it wants to be going down. All right, but we're back below the moving averages here. on USO, which is how I'm viewing the oil. So that's bearish for now. It tried to break the 200-day, but it failed. All right, so now we see if this support holds. If not, could be going to a new low into the end of the year. So keep your eye on that. Let's look at some of the glamour stocks. Apple, 200-day. First time it's going to test the 200-day in about a year. It looks like it's headed for that. May not make it there. May come in a little shy of that, maybe. But I think at this point, I think a lot of people are going to be watching this 200-day. I know, people use their dreams to pick stocks and gut and instinct, but everybody looks at where the 200-day moving average is. Everybody wants to know where the 200-day moving average is. Okay, the funds, the institutions, individual traders, believe me, people will watch that and people will make decisions based on that. Okay, so that is going to be a very key number for Apple. Don't let anyone tell you different. Amazon, okay, one of the stronger names for a while now, looks like it's ready to maybe take a further dip lower. 200 days a little bit away from here. Okay, that's 10% away. Now, Amazon does report this coming week. So, let's see if it can get a lift up here or if it's going to just, keep going down and maybe sell off into earnings and then get a bounce post-earnings, or just kind of hang out here and then maybe sell off post-earnings like what happened with Google. Apple also reports this week. Okay, and again, the 200-day would be nice to see if it could trade down to the 200-day ahead of earnings and then see what happens there. Google, okay, got cracked. This was the quote-unquote accidental release of earnings on Thursday. That started the weakness in the market. And then, of course, Friday, there was more weakness. You see the 200-day is down here, but there's a lot of support before that. Okay, there's a lot of support before that. All right, and you see here there's a diagonal trend line down here. All right, you can see that's down here in the 630s. So who knows where the 200-day will be there if it keeps going. But again, this is support. You got some support on the way down too. This was a balance area. That's why that held up there. For now, at least, it doesn't mean it has to stay there. Las Vegas Sands is interesting. I found this on my in my scans, and you can see it's not really an inverted head and shoulders, but it's forming some sort of bottoming pattern here. See if it can get above its 200-day moving average. Okay, let's see. Win already above its 200-day moving average, but really not in a rush to move out here. Potash channel, and now it looks like it wants to go down and test towards the bottom of it. All right, RIM, my favorite. Not my favorite, as in I think it's a great buy. I love doing the analysis on this. You can see it came up into potential resistance, and now it's just kind of sitting here. I still think it tests $5 eventually, but I don't know how many years are in it eventually. Netflix, okay, we watched this one for a breakout. It broke. Watch for a pullback. All it did was get a little lame bounce back to up here to almost 70, and now it's kind of just chilling out on the moving averages, so not really moving. Price line, okay, on its way, looks like to these lows at a minimum. That's not really a big stretch from here, only a couple points from Friday's lows. And then below there, see if we can get a Fibonacci grid from here. Okay. All right, so this is a 62% retracement. Below that, we have 488.44. Chipotle Mexican Grill. Big gap down. Let's look for support levels here, potentially. Even though I have all the same moving averages, I don't really use a 200-day on the weekly. You can. I'm not really, I don't really do that when I do the analysis, but you can see the 200-day on the weekly does line up with this support level here, 212s. So something to watch. And then, of course, you have down here, 159 areas. That beautiful little cup and handle pattern that moved out. So let's review. Okay. Had an ugly day on Friday. Financials are holding up well. The S&P held its 50-day, means it could bounce from here like it did the previous week, but I think it's going to go down and test this channel. I think that'll do a couple of things. First, it'll knock out the bulls that are waiting to buy the 50-day. All right, it'll get the bears all excited, but I think it could come into support here. The NASDAQ 100 has its 200-day coming up as well. Okay, and that's going to be very key support. Don't kid yourself. There'll be a lot of people watching this. Here's the Qs if you want a different look. All right, same thing. 200-day coming right up, about less than a point away. Want to see what we do down there, how we hold down there. There is a bullish tendency into the FOMC meeting. Doesn't mean we have to bounce, but we are stretched here. We are oversold here. So it wouldn't be out of the question to get some sort of a bounce here. And that bounce has to be watched, because if it's a lame bounce and if the financials start to crack, we saw Goldman in a wedge, right? The financials start to crack, okay, could lead to more downside. With the election coming up, we may be on hold until after the election. Maybe the election will be a good excuse, no matter who wins, to sell us off or rally us. But I think we're at a real key decision area in the market here, and I think it has to be watched. That's it. Hope you enjoyed this video. Feel free to contact me, and stay tuned for the Sunday night strategy sessions. I know I've been promising that they're coming back, but they will be, and they will be 100% free. Don't fall for any scams where people who know nothing are going to try to charge you to attend their hype and their pump and dump classes. All right, I'll talk to everybody soon. Have a great rest of the weekend.